Over the last 9 episodes, we've covered market structure, your highs and your lows, liquidity, London lows, London highs, previous day highs, fair value gaps, where we cause displacements in the market and the market wants to return to those gaps, order blocks, where the market reversed and we come to revisit and then continue downwards or upwards. Kill zones, those are our times for Asia sessions, London sessions, New York sessions. Trade psychology, on how we manage our emotions, and then a very important one, risk management. And risk management is what can keep you alive longer in this industry. So, on episode 10, we are going to put all those things together and go through a random replay where we click the button. It's going to give us a day in the market on NQ, and we're going to see how we do. So the real question is, how do we put this all together and become successful traders? If you've made it this far, you're probably ahead of a lot of other people. So this is the ICT series with Dom the Bomb Trades, the last episode, episode 10. All right, what's up, guys? Welcome to the charts. So I'm going to be using TradingView's replay, and if you notice, this is the bar. It's called the bar replay. It's right here, and you have to have the premium membership. So I'll put the link down in the bio. My link gives you, I think, the first month free, and maybe the second month free. I'm not really sure, but I know it gives you the first month free. Honestly, you could just get that first month free and then cancel it so you don't have to pay anything. I know everyone starting out is trying to save money, but you need to get this bar replay. This helped me out a ton when I first started to practice what I was doing. So let's go to, and if you see anyone trading on TikTok Live, make sure they don't have this down here or this highlighted while they're trading, because you can hook your brokerage account to this, and that's what I do. I trade off of TradingView, which is a software that I've downloaded on there, but you can go to the website and just trade on there. But a lot of guys on TikTok, you'll see this or you'll see this, and it's like a bar replay, and they kind of know, they already previously know where the market's going, and then it'll say like up $1 million. That's completely fake. So we're going to select a random bar. We're going to go on the 5 minute, and I'll probably do my executions on the 1 minute. So what we want to do is look at market structure shift, or market structure. So right now, this is August 5th, and we have and I clicked select a random bar, and it looks like, we're kind of going up here. So we have a nice market structure of an uptrend. So we will see where that goes. So the first thing is our kill zones, ICT kill zones. If you don't know where this is, click this button right here, okay? Indicators, and you'll go to ICT kill zones, and it'll be this one right here. You click that, should pop up. I always have it in my little arsenal right here, along with the EMA and VWAP. Sometimes I'll pull my VWAP up or my EMA, but I always have my volume on, and then I can click the I right here to hide this when I don't use it. But I'm about to show you how I use this. So I will get my Ray tool out, and we have previous day highs, and then we have Asia lows, right? Asia lows, and then it looked like it already swept the previous day lows, and we're still have, oh, okay, so we're in the Asia session right now. So let's play this out all the way up to New York Open. So we will continue this. See how you can do each bar. Now we're in the London session, and it is about 5 in the morning right now on this replay. we are going to go all the way up to 9:30, 7:30. We're getting there. And it looks like the New York's about to open. So we can start charting out. So previous day highs, 9 o'clock. It's 9:05 on this chart, which is about the time that I release my pre-market analysis video. So we'll have Asia highs right here, Asia high, and honestly, London highs. We'll do London highs. And then I color code those. So this will be red, Asia's will be blue. A lot of people do New York PM, and honestly, more people do than they don't. I'm just not I don't like New York PM, but you 100% use New York PM highs, okay? So test it how you want. People make plenty of money doing that. I just like to focus on previous day highs, Asia highs, and London highs, like overnight sessions. We have a pre-market low or London low. Pre-market low is what I usually will type them in as. Also, let me go over something real quick. For a long time, and it's just the little things, man, that really help out. I would try to get this nice and perfect and then unclick it, but you can hit click and hold. So I'm holding it, hold shift, just click shift once and then let go of the clicker and it will snap into place. So that small little tip should help out. Previous day highs and lows, I marked them purple. And it looks like that's what we're working with right now. So I will undo this to make the chart a little bit more clean and see how this plays out. So we are at, let's see, looks like 9 o'clock right now. This is 9:05, 9:10, 9:15, 9:20, 25, and 30. Market open. All right, so we took out pre-market lows and London lows, pre-market lows, either one. And the only draws we have, guys, is these draws above us. This is a nice little bounce zone area. But let's see what, hold on, let me go back on that. Let me see what we're dealing with here. So we took this out. Let me go to the 1 minute. We have a 1 minute inversion. This could honestly play out right here. So we will actually mark that 1 minute inversion. So we swept the lowest liquidity we had, the only low liquidity we had. We created a 1 minute IFVG inversion fair value gap. And honestly, our draws would be opposite draws on liquidity. London high, Asia high. So what we're looking for now is for this to tap back into this 1 minute inverted fair value gap. Now, it's 9:34 in the market. If this was 9:45, I would almost consider taking a very, very small risk and putting my stop loss below this and then target these. Okay, 10 is ridiculous. Let's just do something reasonable. And then targeting these higher draws on liquidity. So looks like a 1-to-2 ratio, 1-to-4 maybe. But I would do a micro, literally 1 micro. But since it's the beginning 4 minutes into the market, I'm not going to do anything because I don't know if this is a manipulation. All I do know is my draws on liquidity. So when in doubt, what are my draws on liquidity? Well, the lower ones are taken out, so I can only assume that the banks and the hedge funds want the higher draws on liquidity. So do we get to tap into this box? And it might just take off. We'll see. Let's look at the 5 minute. Did we create a 5-minute order block? Not necessarily, just a nice wick back to the 1 minute. Are we going to get a tap back into this? Okay, this is looking pretty good. So we've taken out the high of day. We have a very strong push up, honestly. This is didn't mean to click that. This is a very strong push up. 1 minute FVG. I put these little 1 minute ones yellow, and if it's a inverted one, I'll put them red. If we can get, let me see here. Okay, so, and this looks like a nice little order block. So if we can get a market or break a structure right here, break a structure. Did we get that yet? No, we didn't. It's just a little bit through. And I will do this honestly, like live. Like if this pushes through right here while it's moving, I'll kind of, honestly, I'll go in on it. But I like the way this is set up. So we had a small little push down here, and a lot of some sellers might be selling at the top right here, and then bam, the market pushed right back in and said, nope, we're going to continue higher. If this can break structure right here and continue a healthy trend up, then I will consider entering in on the trade, because this FVG is holding true and it broke the high of day. And that's your entry signal. So your stop loss would be this swing low, and you want a 1-to-1 ratio. So just knowing this right here, it's a 1-to-1, but because this, I'm risking 1400 for, oh well, let's see. That's why we have this tool. So this would be it right here. London highs, this swing low. Honestly, I like this fair value gap right here. It's a 1 to 1.5, even better. So we are at right here. I do a little bit before this high, just in case the market likes to. Honestly, there's so many horror stories where I had my take profit 0.25 away, and I don't even try to change that. There's no, I mean, I'm not that greedy. And then we'll do this about right here. So we're literally, if you look right here, it's always going to be 1. So 1 to 1.58 risk to reward ratio, 1 to 1.58. We are going to buy, and this is how our trade plays out. So how am I feeling? Let's talk about trade psychology. I'm feeling pretty confident, and I have rules set to where I'm making 1, maybe 2 trades a day. So if this trade doesn't work out, then that's okay. I have another one in the chamber. If this trade doesn't work out and I don't have another setup, that's okay. I have 4 or 5 more days in the market, this week, or 4 more days in the market. So if I lose this trade, it's okay. I'm not going to stress out, but our model's set up. We have no draws on liquidity on the low side. They have been all taken out. And we have a London high right here, ready to go. So let's see how this plays out. We are tapping into this, honestly, it looks like a 1 minute order block. And you can draw these things out as you go too. So 1 minute order block. 1 OB. And it still has this 1 minute fair value gap that still holds true. Nice push to the upside. We're up $120. And what would make me feel better is if we continue to keep breaking structure. So right here. If we break structure here, I will feel better that we will continue to this upside. We're up $255 and $400. There we go. We're getting a nice push. Let's talk about trade psychology. Am I, if I'm up, $900. Some people would like to pull that money and be like, oh, this is it, I'm done. I haven't had $900 day in a long time. But you're messing your ratios up. So yeah, let's say you have a $900 day here, but your risk to ratio tomorrow is you're risking 1400. Well, you only made 900 yesterday. So your risk management is not very good. So you have to see the trade through, okay? So let's continue this up. Another push, 1340. And we're slowing volume down, so we might get a retracement. And big push down, but we're up 1400. So what makes me feel better about these types of situations? We are close to the draw on liquidity, but we're going to take our fib tool, and we know that we need a retracement. This is your Fibonacci tool, fib retracement. So if we get a retrace, we want to see this come down to 50% and then back up. So we'll go through this and see what happens. Do we need this retracement, or are we going to push higher? And oh, you see how this is exactly what I'm talking about, guys. This nice little wick right here. It's like, you know, we could put ours to this London high, but I put a little bit before it because the market likes to trick you sometimes. So 1845, we're up pretty high, and if this were to break this right here, I would not really be interested. We're making a trend, okay? So this would be a market structure shift. So at this point, our retracement was good. We had a good retracement. At this point, I would probably go to break even because I wouldn't want to see that go any lower than that. So let's put this up to $0, confirm. And we want to see the trade through. We're not thinking monetary benefits. We're thinking I'm a trader and I want to beat the market today. So we'll see. We're so close to these London highs. I would find it very hard to believe that it wouldn't want to take it. So let's hit one more. A huge push down, push up. We're getting some market manipulation here. Another push up. We're up $2,030. And bam. Guys, that's it. That's how you do it. It's all about liquidity. You guys saw me hit this random button, select random bar. We had a random bar. We got a 1 minute inversion that I was honestly patient, waiting for it to get tapped into. It didn't. We had a small retracement here. It got the 1 minute fair value gap. We created a 1 minute order block. We entered in on the trade at the market, at the break of structure. We held our trend upward. We made a nice healthy retracement. It's okay for the market to pull back while you're in a trade. Made a nice healthy retracement. We continued to manage this trade. We started to come back up. We told ourselves, hey, if this was if this broke market structure right here, I wouldn't really be interested. Look, it didn't. It did not break market structure. It actually held right there and continued. So, but to manage our risks, guys, we went to break even. And if the trade were to come back down, it was okay. We weren't going to lose any money. We didn't sell at $900. We didn't sell at $1,800. We saw the trade through. The draws on liquidity is what the market wants. If you had 2 contracts, you could even go to Asia. You can go to these Asian highs. And we hit our take profit. That's how you trade the market. That's how you put it all together. That's trade psychology, risk management, all into one. So this was a great example. I honestly, truly didn't expect to get this on the first select random bar. I thought we were going to have to just wait another day, keep clicking through. But it played out perfect. That was every single part that we have talked about from beginning to end, with kill zones, liquidity, fair value gaps, order blocks, trade psychology, and risk management. What a trade. So let's see what happens. Does this want Asia highs, or is the market completed enough to where it wants to make a bigger retracement? So if you had 2 contracts, you would, oh, see that? You see that right there? That's what I'm talking about. It gets a little tricky right here, and people just they just need to put it down 0.25 and saying, oh, I almost missed it. Let's see here. Still didn't hit those Asia highs, and bam, even hit the Asia highs. It even took out the Asia highs. Okay. When you get more advanced, you can hold 2 contracts, sell one right here, sell one right here. This is beautiful, guys. This is exactly what we're looking for in a trade, and you could do this every day. Every day. The secret takeaway on this is liquidity. Okay, liquidity is your friend. When liquidity is confusing and you're not really sure, don't trade. You don't have to trade. But that concludes this. This is great. I hope that this is awesome. I'll do everything I can to show people this video to help everyone out. All right, thanks. All right, guys, I've had a blast making these videos, and I plan to be around for a long time in this industry. And if you need that trading view, that replay that we just did, where you can practice these concepts, I'll leave a link in my bio for you guys to click on. I think you get the first month free and $15 after that. I'm not really sure. But TradingView is the best platform for you to start practicing these concepts. And don't be afraid. And watch the channel, subscribe. I will constantly be putting videos out and updating you guys on new ways to make money in the market, or deals that prop firms are having for you guys to leverage these prop firms and get money out of them. Maybe I can make a video on that. But the ICT series is over. I had a great time. Subscribe to the channel, like the videos, and share this with friends. If someone says, how do you trade? What is your concept? Like, what's your model? You can just send them this playlist and say, look, man, I don't have time to explain it. Here's a playlist, episode 1 through 10. Watch from beginning to end, and you should be able to get some type of start in the market. So, I had a good time, and as always, we're going to make every single one of you guys profitable.